Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, we're going to talk about the great rotation and how to make money from it. Let's dive in.
Trade Genius.
All right, Mr. Kudlow, what is the great rotation we're talking about today?
Yeah, so there's a couple schools of thought, right? So are we going to get a market crash like happened in 2008? Like 1929, kind of total deflationary dump, or are we going to get more of a rotation out of what they call financial stocks? I don't mean banks, financialization versus hard assets like gold, silver, oil, copper, et cetera, et cetera. And there seems to be a fractal here that looks like it's setting up again. And really what caught my attention early on was with the strength of uranium. And before I show the chart here, in 2000, you had tech blowing off like we did the Nifty 50s in the 70s, and gold and energy were fairly stable. And then you had a situation where in 2000, tech started to get overvalued, got rolled off, and then you started seeing these commodities move. And what moved them was oil, gold, and uranium. And here's a chart I want to show you that kind of shows what the potential is. I like this fractal a lot. I've been personally trading this fractal, and normally you wouldn't want to own energy in a recessionary environment. But what's happening here is that as we're going into recession, we're going into a period of just waves of liquidity being thrown at the market. And at some point, Phil, that fire hose turns from NVIDIA and turns towards energy and gold. And uranium, to me, is kind of the canary in the coal mine, because we had an 8x move in uranium in the 2000s, and we're repeating the theme again. We had a theme in the 70s where you had energy was dominant because of geopolitical risk and also devaluation of currencies, and we're having it again this time too. So I think we're getting that fractal, to me, is lining up, and the central banks and the governments around the world, they fear deflation more than they fear inflation, even though inflation is likely to take all of them out of power. It's just the slower version of death than if they drop this thing into a deflationary spiral. And so I just want to show this chart, take a look at it. By all means, it's not exact. What it's showing here is that tech is going to subside and you're going to get a big move in the commodity space. And look, gold and silver and Bitcoin have yet to ignite. Remember, we're seeing now, Phil, and I'll let you jump in a second. We seem to now understand Bitcoin likes liquidity, okay? And it doesn't matter if the market's collapsing. If liquidity fire hose is on, Bitcoin's going to run with it. Gold and silver like currency disturbances, and energy is an inflationary hedge. So I think you have to be exposed to these three areas, and then you're going to have to pick your shot shorting the NASDAQ. And there's some really cool tools out there now, which you could do that without a whole lot of leverage.
Yeah, I think what we're going to get is another round of printing, and I think that occurs either Q4 2025, Q1 2026 is my best guess right now, until we get more market-generated information, as they say. And you're definitely right. You're definitely going to want to be in commodities. Gold, Bitcoin, I would argue, probably would expand the most, but it's the most sensitive to liquidity. Recently, gold's actually been outperforming Bitcoin price-wise, performance-wise, and we do see those windows when that happens. But ultimately, I think the squeezes in Bitcoin are just because of the reduction in the amount of circulating supply out there are going to get more and more violent. So it's just a very volatile asset class. But on the whole, commodities, I think, are going to do extremely well after this next round of printing. You can't just be sitting in cash, and even stocks to a degree are just, your value, it's just eroding away, right? So you're far. That's why we talk about hard assets, right? So even real estate's a hard asset, and we've seen that obviously go up a lot in value too recently. Although that will cool off, I'm sure, over the next 12 to 18 months. But that's shows you the power of erosion in the fiat, and why really ultimately that's why Bitcoin was created, right? In 2009, that was embedded in the Genesis block about how England or the UK central banks were going to have to start printing again. So, and what have we seen since then? Just a meteoric rise in the value of that. And then I think also too, you're going to have gold. I think gold's finally getting out of this, range that we've been stuck in. And we're seeing kind of you got to zoom out. It's going to take time, but I think we're seeing a big breakout in gold. And I think the other metals are going to follow.
Yeah, and look, energy is definitely an inflation hedge. You see it. There's too many really rich countries that are just not going to let their oil get dumped on, and you have and my only argument against real estate is that it's really not a pure hard
It's
asset.
not liquid.
It's not liquid, and governments can turn it into a liability. Governments and your own depreciation can turn it into a liability. So you have to really pick your spots with real estate. But the purer you get, the better you're going to be. You want to own the people that are mining the gold and silver. You want to own the people that are drilling the oil, and you want to own Bitcoin. You want to own the people that are collecting and mining it, and you're going to make a lot of money. Remember, even if I'm wrong and we go into a deflationary spiral, the Homestead mine in the United States during the Great Depression outperformed everything, and it was a positive yield too. So this is where you want to go. I'm not calling for the world collapse, but we will see secondary and tertiary countries go by the wayside. Remember, the United States is the one-eyed giant in the land of the blind, but people are going to be grabbing hard assets like there's no tomorrow. And if you really want to be scared, Phil and I look like downright bulls who've just watched Stansberry and read some of his tweets lately. You're just going to want to climb into an ICBM missile silo and just hide out for the next 20 years. So, but remember, this stuff's geometric. Debt is geometric. Interest is geometric. If you're not bringing down that principle, you're creating a geometric event, and you might as well own things that are not going to care and are going to match that move. So that's why I wanted to share that with everybody. I'd love to get your thoughts and opinions, but you need to have exposure here, and we've been doing great with it. You would not have thought as we slide into a recessionary environment that these assets will do well late cycle, but the market's sniffing out stagflation here.
All right, guys, well, let us know your thoughts in the comments below. Love to hear from you. As always, check out our stuff over at tradegenius.co. Check out our specials. We'll help you navigate these wild markets as we progress into the final quarter of 2024. Thanks for watching. We'll see you on the next episode. Take care.
Trade Genius.